Good evening, guys. This is Marvin Gill from StockMarketPlan.com with your stock market watch for February 28th, 2011. Market today, again, continuing that sideways pattern that I called out, I don't know, 2 or 3 days ago by drawing, looking at the spiders again here, drawing these two trend lines here from these two tops. And then this is just a continuation of this 50-day moving average in the red. We're looking at a daily chart here. Here's those three huge volume down days that were of concern. And then we've done this bounce off the 50-day moving average right here. On Friday I spoke about the market possibly start to consolidate in this area right here, and here we go. We've started that already. And also, if the market can carry this out, what I'm going to be looking for is trade like this. Nice light volume, just let it consolidate in here sideways between these trend lines, and then either later this week or later next week or whenever see a breakout either out of this top line here or the 50-day moving average breakdown. The 50-day moving average has been defined, definitely defined lately as a pivotal area. I close now. If we have a close, a daily close, okay, if the market closes below this red line here, the 50-day, that's going to be a great cause for concern. So I'm watching that closely, not only in the indices but also in stocks. Here is a chart of the QQQs, the NASDAQ 100 shares, and again, same thing here. Here's the 50-day moving average, and we basically bounce off of it. We pierced it intraday on the 23rd and the 24th, but closed above the line. You can see the bodies above the line, and then we went off from there. And here's the Dow, okay, and the Diamonds Trust, symbol DIA, and again, same thing. Here's the 50-day moving average. We bounce off, and off we go. So I'm going to get back to the S&P 500 here using the spider, and let's go ahead and look at the intraday action of the day. Today we opened up and we gapped up. We opened right here, and here's yesterday's close, this white line. Friday. Last session was Friday. Friday's high, this green dotted line here, and then the Friday's low is way down here. Okay, so we gapped up, and you know, this is why I draw these are previous closes and opens and highs and lows, and here they are creating resistance. I mean, we gap up and we hit. This causes friction. These lines, stock market price doesn't like lines above, or points of resistance is what I call them, but it does like points of support, like down here. Look at that, to the T. Okay, so we go up, and then we run into this, and watch what happens. Volume starts to decrease as we're going up. Okay, that's the first thing I noticed in the morning. I was like, this can't last, and sure enough, we start trading sideways, and now you see how much of a gap there is here. It just plummets right through. There's nothing really to catch it, and we start trading sideways, and then we plummet again, nothing catching it here, right? There's no yellow lines that you see that are going to create any type of support, and then we get down here, and finally, okay, we've got a yellow line here, yesterday's high, yesterday's close, and we find a bottom here for the day, and then we work ourselves higher, and it went higher just as fast as it came down, because again, there's not a lot of resistance in this area here except for this yellow line. So that's what happened today. Again, overall day is low volume. It was constructive. Here's a daily chart again of the S&P, and again, I'm going to draw that line there. So this is our 50 days, so it could trade something like this here as this starts to consolidate more, and we're just going to have to wait and see. I did mention Friday that we can see fireworks. Definitely, the market as the market tightens, any market, and it looks for a way out, either the upside or the downside. If you see volume like this, when it breaks up or down, it's going to be very meaningful. And if we do it on the downside, then we'll come and visit this 200-day, because there's really nothing else out there that's going to support the market until we get down to this level. So again, still in a long-term bull market, and now it's just trying to digest these 3 days right here. So we'll just let the market dictate what it wants to tell us. So there are areas in this market that are breaking down, and I'm going to start showcasing stocks that I'm seeing them. The market action is telling me that right now there are at best a hold, if not a sell, but definitely not established new positions. And I want to discuss. I'm going to start with the leaders of recent leaders, stocks like the Apples, the Amazons, and Netflixes that are starting to see some pressure. And it's just worth noting. I'm just paying attention to them, and they're acting really, really toppy here. And the first one I'm going to do is tonight. I'm going to do Amazon and just share with you what I'm seeing there and what is causing some concern as I look at those stocks trade in this environment. Okay, guys, thank you again for tuning in. Don't forget to check us out on Twitter and Facebook. It's Marvin Gill from StockMarketPlan.com. Thanks for watching. Good night.